Hey everybody, it's Booksy. Today is Thursday, August 3rd. It is first thing after market open. I'm going to do an update video today because I will not be able to stream. Today is going to be a bit of a mixed bag, in my opinion. So what's going on right now is just consolidation, and there's not really much else to talk about in terms of technical analysis. But I wanted to mention that a few things are possible here. So the main thing we want to watch for in the coming days is higher lows. Anytime you have a breakdown of one of these lower creeks that are dropping, you have a possibility that you're just going to start sliding. And it's a very simple idea. A creek is just support or resistance. And if you find support at higher lows, that's typically a good thing. We didn't get a full reset in RSI on like the 1 hour. We're looking at the 30-minute here, and it did reset, and it reset at the top of the range, really going into the end of the week, early part of this week, and that's around 450, and that's important because, as you all know, if you've been following for a little while, this is the previous supply zone that we broke out of, so we came back and we checked it again. There's still not a lot of trading that's happened in this middle area just locally. We're talking about over the last month or so. This is a whole month-long period. If you zoom out just a little bit, you can see that this is the same area that was traded up not too long ago, back in May. So we're kind of retreading a previous range. And to me, that's usually a sign that there's a liquidity grab, right? Like you're going back and you're getting liquidity at an area that you found either there was enough trading there, or maybe there was an excess of buyers and sellers in that area, and the markets just tend to gravitate towards those zones. I marked off this bottom area right here as like a 50-50 range, and you can see that that's the top, and you can see how we navigated along and ultimately broke out in the upper 50% of that range. We're kind of doing something very similar right now, but the range is much lower, it's higher than the previous bottom range, which we would call this like the last major LPS, and we're kind of in the next one up, and that would correlate to this area over on the left-hand side. So the reason that's significant is you would want to look at, and I'm looking for my box right now. For some reason, I don't see my box right now. It's in here. You would be looking at this area, and you kind of have to take into account, like, well, where are the major supports and resistances here, and you're basically looking at this zone. So again, like a 50-50 around this zone is going to have, just like this lower area, is going to have a possible catch maybe around the middle. That's typically where smart money likes to drive the price, is from the center of the range. You don't typically get a lot of retail buying in center range because it's a little bit ambiguous, and retail likes to buy at the top or the bottom of the range. So right now, are we above the 50%? I'd say yes, I think we are. I think we're above the 50% here, and that's a good thing. However, as I mentioned just a few minutes ago, this can't break down continuously, and if it does, you're really looking at a full-on breakdown possible, because again, where are we in the scheme of things? Well, we pushed up pretty high. We came up and created a massive hook here. We did make a new high above the previous one here, up at 620 area, and that is one of those parallels that we've been talking about. And if you don't jump that parallel, you're not going to run. I mean, it's kind of like an obvious statement, right? Oh, if you don't go up, you can't go up. But it's more than that. It's that we have never jumped these. After we've dropped beneath one, for the last 2 years, these parallels, we've just never come back above. They've always hooked and broken down. So right now, and I made a point in the stream yesterday to try to address that bearish possibility, right now this setup doesn't look that different from most of the other bear setups that we've had. And I don't say that to fearmonger or make anyone like kind of nervous about it. It's more just that you have to know what it is to expect in a bear scenario so that you can know what it looks like when the bull scenario happens, because it should be different. And one of the things we talked about was this motif of breaking down, and how when you come up to these places where you're getting these continuous, what I call them cat ear tops, but they're more like double tops, but really what they are, if you look closely, is they're just continuous breakdowns of those vertical supports. Eventually you kind of narrow and you might break down. And that's sort of the same exact model that we see happening all throughout the long distribution that we've had over the last couple of years. You get this first move, and it looks really strong, and then you start seeing those breakdowns and those hooks, and they just start failing on micro levels. To continually move forward, you have to get back above them. On, excuse me, a couple of days ago, I was hoping that we had done that right here at the end of the day on Tuesday. It seemed like we had pushed back above one of those levels. But then, in typical AMC fashion, you had a gap down after hours, a rug pull, and it ends up that no, it wasn't actually safe. It broke down again. So this is kind of that continuous narrowing breakdown that we see in the master fractal whenever you have a distribution about to happen. The reason that I'd be a little bit more optimistic right now is mainly because this push out did push above the macro creek. But I have to say that it's not unlike other times when this has happened. And when this is pushed up and then broken back down, it's not usually a good thing. You have to recapture that macro creek. And if you don't know what this macro creek comes from, it's from August, and it comes all the way back down through the highest high that we've made. And we finally pushed above it. It's a big deal. But it's not the end all be all, because unfortunately we did that sliding kind of what I would call like an S-curve right here, a good 50-50 S-curve to come back through it, and then we hooked. We came up and we rejected along it. If this is an area where this LPS is going to occur and the buy-in needs to occur, then you should see smart money break right back out. Okay? There are some positive signs this morning. RSI on the 30-minute anyways has pushed above the moving average. You do have that higher low. Thankfully, we caught pretty high, right in the range that we were hoping, that 470, which is a macro fib. But right now, it looks like it's just iterating, right? So you've got this S-curve down and then a hook, and then you've got an S-curve down and then a hook. And you can't continue to see that happen and expect big action, right, until it finally finishes. So we could be in for a bit of a long haul here. I had anticipated that might have been finishing on Tuesday, but it just didn't. It just continued. And it expanded, and that's the way that fractal iterations work. Like, sometimes you think it's done, and then it makes another leg, and you realize that, nope, it's not done, and all the different layers of this are making that same extra leg. This is another example of what I'm talking about with that push-up here, and then it fails, and then it comes back down and hooks. Yes, it looks very similar to what we're seeing right here in terms of a top. Does it mean that we're going to slide and then have this big drop into a spring? I don't know. But much like 2020, this particular bottom we anticipate as an LPS right now, because that's what we're hoping for. It looks like it failed to make a spring when it came low. Something similar happened back in this range, and it did come down and it formed what looked to be possibly an LPS. But then those up thrusts ended up becoming kind of distributive, and we slid back down for a spring. So the bearish scenario here, though it's not the most fun or comfortable scenario, is pretty much just that you're going to basically just come down and finally form a spring. There's some people out there that have been very, very down on AMC when it comes to downside potential here. They're talking about going to sub $2, or they're talking about going to even below 3 is still really low. That's a breakdown. That's not a spring. So in my mind, I don't think that's happening. I think that we have a change of character. I think that we're pushing the boundaries. Finally, we're doing something different than we did before. When I say change of character, I'm talking about volume specifically, where the volume is. It's mostly in these buy-ins. It's not mostly at these tops, and that's important. Right, that doesn't mean you can't come down for a spring. And a spring action in a phase C or whatever
for Wyckoff would look a lot like an LPS at first, and then you would get an up thrust and then a down thrust. It's totally possible. It's not out of the realm of possibility. And if you're wondering, like, well, where does that happen? Where does that happen? Well, look, it starts really simply with a breakdown of this final trend right here, and then a breakdown of this uptrend right here. So if you're drawing an uptrend starting on June 26th, you can see that comes up pretty steadily. There's a small break there after that M cross, sort of a test of liquidity. Again, it's like coinciding with a drop there, and then that 50%. That drop creates a new uptrend that we're now holding. So you've got two kind of layers here, right? And then you've got that middle 50%, which is pretty low at 430. That to me would coincide with a complete and total retest of this lower creek break or this lower trend break right here. So here's the good news. If we were to break down right now, even if it happened on earnings, which is where this is kind of like coalescing, it looks literally like it's intersecting on earnings right here. Even if it were to break down there and start dropping, it is possible that you could come down and retest this creek without making a lower low. And that's not what's normally happened on AMC. In previous times when I've been very bearish on a breakdown, it's usually because the creek is so steep that there's no possible way you're going to come down and hit that creek without making a new low. And a lot of times people say, well, it's just going to gap fill and then come back up. Well, if it can gap fill and get the creek, it's better for us, right? It's a more bullish setup. On the other hand, if it's like the gap fill was really far and you move sideways forever, there's no way you're going to come down and just gap fill if you're trying to get a creek retest. You have to go all the way down, right? So that's what's normally happened for AMC. So we don't want that. Anything coming out of earnings at this point, whether it's a drop or a run, would probably be fine, because I think a drop in our case could be just a slide to catch this creek and retest it, perhaps at that 430 level, that midpoint here. It is a throwback to this whole run up that happened, but it's a possible reset too, which is good. And then, which means that it could just start again, right, and push out. And then also, the possibility of a spring. And I think, again, you start losing these upward momentum creeks, especially this downward one. There's not really any reason to think you won't go down for that spring finally. Is that ideal? Is that what I want to have happen at this point? I'm a bit indifferent on the idea of a spring because we were anticipating it for months and months and months. It didn't seem to want to happen here. But is it possible that they're going to take advantage of sellers and just kind of step aside here on the buying side? Yeah, I think a lot of this volume down low has been extremely low volume compared to the moves that just happened. And I think that when you look at the grand scheme of things, the volume drop off here, it's one of two things, right? You've either got a weak amount of sellers, in which case your buyers are going to kind of push this right back up, and you're going to get that push up to the top of the range here at 590. You're going to get that SOS and break out finally. Relief, right? Sigh of relief if that happens. Or it means that buyers are just stepping aside and you have a long operator who might want to see a spring happen. And we did see some significant drops over the last few days, 5% drops that happened on very, very little volume. I mean, just very, very little. And that tells me that buyers are just kind of not participating very much, or they're not there. And in either case, it's kind of, we don't know, right? It's waiting for that breakout to happen. And I wouldn't be a strong buyer here until that breakout happens. And every day that I've come on and tried to talk about stuff, I've given what I feel like is a strong breakout level, whether that's the 525 from several days ago and it never came back up, right? It hooked at 512, 515. The other day, was the most misleading with that close at like 493 where it came back above support and then it just dumped overnight. It was a rug pull. Those are things that unfortunately happen and there's not really much I could do about it. You're just like, okay, well, I was wrong. You move on. You don't always anticipate it. Some people saw a divergence and it pays off, to look at some of the indicators and test those things. The reason why I'm looking at this iteratively was mostly because of APE. This concept of yeah, you've got these moving iterations where you're kind of doing that layup, where you're laying up on something. You're pushing over these creeks with M crosses, but then you're doing it again right here, the same exact fractal basically, but on a micro scale, and you're doing it underneath. The positive side of this is that if you do eventually finish and get those breaks to the upside, it could result in a stream of breaks to the upside, so you're iterating back outwards. This looks almost identical to what you see in the breakout that we had back in June. The downside, of course, is that if those iterations start to break downward, then you have something more like that March 4th slide to a spring that happened before the March move in that accumulation. So either one is totally possible here. And I'll be honest with you, on Ape, I'm very bullish on Ape on the whole because of the pushes above this Antara selling level, and I feel like we're getting that kind of buy-in that we want to see. But at the same time, the iterations are very misleading, and they make me think that this could be setting up for a breakdown. Because typically, if you get iterations to the upside like this, it's not always a good thing. Historically, we've broken down. Recent example of that, if you're like, well, March 4th is kind of far away. That was a long time ago, Booksy. I'm talking about March 4th of last year. When has this happened recently? How do you know things haven't changed? So on and so forth. Well, here's an example right here of that exact same thing happening. And this was back in February. This is not that long ago. So here's that move, iterative move upward here. And then it happened again. And then it tried to do it one more time. And each of these is doing the same thing that we're talking about. Like, you're getting that layup. It's all the same. You're getting that layup here over and over and over again, and it just starts breaking down. And if it breaks the wrong way at the end, it looks a little like a pennant, right? You start looking back, and you're like, oh, it doesn't look like a pennant at first, maybe right here, but then you look at the big picture, and you're like, it could have been more of a head and shoulder of sorts, and then it has a massive flush down. So at this point in time, that's my main bear scenario. I mean, it's not that complicated. I just showed you like 3 examples. This is number 4 possibly, and I don't want that to happen. But here's the rub, right? Is that usually happens right along, a major creek intersection. And the last time we saw this, and it did this kind of a breakdown, and it didn't recover from it, at least not immediately, was right here. And we had that same, and this is the same area that I just showed you, but it's only AMC. We had that same kind of a jump over the creek, right? And this is roughly where it was at the time. And this goes back up to August. And it could be slightly, we thought of it like slightly higher, but it's like right there. Because I remember the shoulder sets up right on top of it, and then you get that secondary shoulder, the second shoulder, and then it slides down. Notice this is like an S-curve with the little cat ears. It's the same kind of setup that we have here, right? And you can see that, all right, what if we just drive this price, what if we just pull this up a little higher so it's more of like the middle of that S-curve? And you can see that, once again, yeah, that's the trend that it has that S-curve right around, almost like that rotational symmetry right around that creek, just like we have right here. It's almost the same. You have the breakdown, the big dipping breakdown. And then here you have the retest and then another breakdown. Now, the good news, of course, being in this case, it did make a higher low thus far. But we're really just in a hooking action. There's really not much to say right now, unfortunately. That's what I'm saying. It's going sideways. So until you see a move definitely up or down, really don't know that this is out of the question. And yes, could it just be this, where it's just a dive to test a creek? Yeah, it could be. And that could be the end of it, And that's what I'm trying to say. It could just be a dive to test the creek or whatever. But we really want to see something different. We really want to see it catch sooner. We don't want to see it just start sliding again. Because most of the time, if this happens, it's because there's not been a liquidity grab that's sufficient, or there's something that was left behind. This guy went really low in after hours, but ultimately, like, it went down to retest a trend that had been left behind by previous trends, or by previous bottoms. And it was a, it was a dip beneath this parallel. And not only did it go back down and retest the liquidity and have these big buy-ins, right, in that 380 area, sub $4 basically. But it also showed, hey, we may want to trade beneath this rising creek, right, which then acts as support until it doesn't, and then we get the hook and we break down, and now we're beneath that rising creek again. And so it's kind of a frustrating setup, and this is just basically what AMC has done all the way down, ever since the big run-ups in June. We've gotten these kind of fake out moves. We get these S curves down through these parallels. We try to go back up and we can't. It's false breakouts. In the range that we're in such a place right now that I think we're starting to see that major cross right here, again, of the macro creek. And you can see the range that starts way back near the beginning of the year, really basically around the time that APE was created, with these walk-in to this lower range, that if it starts moving above this creek right here, which is where we want it, and that's why I think there's a lot of resistance right now, I think you're likely to get that big change, because this is a change. This is a higher high than the one that we made in the iteration in May. And that's a big deal. It is a change of character. But again, that doesn't mean you can't possibly have, because it means you're possibly changing direction. You're no longer in a downtrend. But these are always like lower highs. This is now a higher high than the previous. So it's a possible indication of a change of direction. It just doesn't mean you don't get a spring. That's what I'm trying to say. But I do think it's certainly a good change, but I really want to see it push up and get over here. And I know that's a little late in the game. People are going to be like, well, I don't want to get in down there or up there. I want to get in down here. You can. I'm just saying that right now in this current time frame, the way I see it, spring's still not out of the question. It's just not. I don't think I would be a strong buyer unless I saw it come up to like over 530. And really this area right here is super critical in my opinion. I think if it comes up and finds support over 530, you're going to get that push to the upper part of here. And at least that would be a safe enough trade just to the top. And then you could wait and see if it breaks out again around that 620 area, 590 to 620. So that's where I stand right now. I already showed you right here that, again, the consolidation that we're seeing is really a consolidation around the 50%. And if you go to the, if you go to the formula chart, this is actually like the 50% marker. And it's roughly like the main whipsaw that we've had. So you can see we're kind of still doing the same thing we always do. We're just kind of gravitating along there. Again, with the exception of the fact that we have jumped some pretty major resistances, which is good. Okay. On the last chart that we're going to look at today, which is the baseline chart that has the deviation on it. This is a formula chart, as you can see up top, pretty huge formula that basically gives you the average deviation of AMC and APE to the baseline. So it's an average of how far away AMC and APE are collectively from their average, from their market value average, which is that other chart I just showed you, that combo chart. So this is saying that on average, you're this far away or you're this far away. I call it the arbitrage chart because this tracks basically where the price of AMC and APE have deviated greatly. And during those times, AMC has always been the one on top. It's always pumped really hard, and APE is dropped. And then when you get that shrinking of the deviation, and again, the lowest it's ever been is around 101 or so. I think it finally made a new low over here. Yeah, originally the lowest average deviation when I first started, it was 101. It has since dropped. But this low deviation around $1 is very significant because it doesn't typically go below that. It means that they're refusing to bring the prices together. You can see at times we've been almost $1 away from that center average, like 4 and 2, 440 and 240, and then this is being the lowest at 370 and 203. So what does this all have to do with the price action? Well, typically what's happened is that after AMC pumps, APE then has a rise. And we see that this is still happening. AMC ran up to $6 and then after hours move, APE had that big drop. And then APE actually rose up and it went high again. And these are the things that keep happening on AMC and APE. And it seems like they're just shifting from selling AMC to buying APE. it doesn't really make sense given the news that we got that would happen here, but that is basically the same thing that happened. I like this chart though because this chart has been highly predictive for timing, and it's actually given us a really strong indication of like where AMC's tops are going to be. Maybe stronger than even the AMC chart itself and the combo chart itself. And then it's also been a really good way to view and visualize and understand the arbitrage and the shifting of values. Right now, once again, I'm saying this still to me looks like a possible distribution until it isn't, right? Until it breaks back down. Could this just have that drop, catch high enough, right? And then push back? Yeah. And I think if you're looking at AMC and APE to run together, this deviation may never skyrocket, right? The deviation here will only skyrocket if, let's say, for example, AMC runs to $11 and APE just sits still. That would cause us to skyrocket. Anyways, this is a chart that I feel like has been really, really important, although it's a little bit ambiguous, right, as to what it is that could or could not happen with the deviation. You have to sort of make good judgments on that. Right now, I was saying that I felt like APE was looking okay if it got the break above. It never did. It didn't have a fake out like AMC did on Tuesday. It just didn't. It never came back above. It actually broke down beneath this creek, and so it didn't have the fake out, and it resulted in a price action that to me doesn't really, I'm not sure why that's on there. It doesn't really surprise me, but it's kind of it has another little head fake right here. And I said I thought it might come back and basically do the same thing, because each time this has had a push up and then an M cross, push up and then an M cross, push up and then maybe an M cross. So I had drawn this line just to suggest that, yeah, we might see it kind of chop underneath here. And that's thus far all that's happened. So it's been chop up, chop up, chop up. I'm, again, pretty nervous about that possible breakdown because this is what AMC has typically done when it's about to drop. And the only time it didn't do this was really the only time. There's only been a few. One was during that master fractal sequence, which we saw later on. I guess in March, technically that finished strong, but it was still had a spring drop in it in that run. But then the only other times we've really seen it where it didn't drop was the August run up, which wasn't a significant run up, but it didn't have that full drop, full reset. It didn't go down for a spring. It just went back for a throwback test and tested the automatic reaction. But then also really June. I mean, the June run up is the best example of this setup right here breaking to the upside. And it all depends on the final break of the iteration here. So we want to see it move to the upside. You're going to have to watch this narrowing, this consolidation, and see which way it goes. Is that going to happen before earnings? I don't know. Maybe not. I think a lot of people probably feel like it won't at this point because earnings is not that far away. Not really worried about it either way. I still think anytime it's at these low levels, if you're accumulating shares or leaps, you're probably not going to be hurt too bad. But obviously you need to decide for yourself whether or not that this is going to be too much of a loss for you if it does break down here and start sliding back down to like 430. Do you want to hold on to those things or not? I can't make that decision for you. But any kind of accumulation low that's long-term at these prices might be safe because you have a really strong setup here, really strong potential for a push all the way back up to SOS. And that SOS would occur way up here around, really around $9.50 to $10. It would be right in this pocket. And I think that's the big move. That's big move number one. Big move number two is the next 50% marker up. It's the next major supply zone up. And it is, in my opinion, going to be that $19 to $21 area. So the potential for upside here is really strong. The potential for downside here, in my opinion, though it's high probability still, it's not like a complete, it's out of the question. I don't think it's out of the question. I think you could still get a spring. But the chances of that spring going below $3, in my opinion, are pretty low based on this setup. And I wouldn't be saying that if we didn't have 8 months of pretty healthy looking accumulation on the whole, and a pretty major change of character in the last several months. So that's all I've got for you today. I try to keep it a bit brief, 30-minute video. Again, I won't be streaming. I'll try to do an update video later today if something changes. I do appreciate you all tuning in. I hope you have a good day, and I will talk to you later.